Hey, it's Chip Harris again. Just wanted to get back with you on updated numbers this week. And today was a big day. It's Friday, first week of August, and job numbers came out and exceeded, even blew away expectations in terms of job growth. Over 500,000 jobs created. And that goes back to what we've been saying for a month or two now in these videos, that recession or no recession, uh, jobs. That's what matters. If people are working, if people are going back to work, if people are earning income, the housing market and the overall economy will be just fine. And interestingly enough, in the same week this week, more great news. Mortgage interest rates dropped under 5% for the first time in 5 months. They have seen a decline and are below 5%. And so, latest number was an average, or a 30-year mortgage was 4.99%, came out this week. Fantastic news for the housing market. Inventory is rising sharply. Going back to that psychology again that we've talked about before, where people who own property or own their homes are looking back over the last year and a half thinking, darn, we should have sold when it was high. We should have sold. Now the economy is softening. The news is creating this mantra where the housing market is softening. And now sellers or potential sellers are jumping into the market thinking, we got to sell now. We got to sell now. Prices are going to decline. Values are going to decline. When, again, I don't think that's true. I think as long as there is a supply and demand imbalance where there are more buyers than sellers, prices or home values are going to stay escalated. And even with the additional inventory that's coming on, we're just normalizing. We are not declining, we're normalizing. Yes, numbers have declined from a sales perspective in real estate from 2021 to 2022. However, you got to keep in mind that 2021 was way above and beyond the call of any type of normal real estate market. We are going back to the pre-pandemic type of market where you have a seller that lists the home, sits on the market, gets showings week after weekend, and takes a couple of weeks or 3 or 4 or even 5 to get offers or an offer and accept it and move on. That's normalizing the market, folks. That is not unhealthy at all. As a matter of fact, it's more healthy than it was in 2021 when we were seeing all this hyperactivity in the real estate market. So, good news all around. Good news all around. Inventory up in housing. Buyers are still out there. Rates are decreasing. The job numbers are exceedingly great in terms of jobs created, and I think the future is bright. Now, I do believe that over the next 2 years, the rest of 2022 through 2023 and through at least half, if not all, of 2024, we're going to kind of be in this melees of up and down economic data. We're going to be recessionary in terms of shrinking GDP growth, which probably will create job discomfort, or even some additional layoffs or lack of open jobs for people seeking jobs over the next 2 years. So look for those numbers to kind of decrease, and look for the recession to continue. The Fed is going to get super aggressive again in raising interest rates, and because of these job numbers. And so their job is to slow the economy down, make it harder on businesses, more expensive on businesses to hire and retain employees, and they are going to do all they can, which is primarily just raising their short-term interest rate mark, which we've spoken about a number of times on these videos, to higher levels until the economy just grinds to a halt. Folks, we're already in a recession, a technical recession. Now the Fed is going to jump to deepen that recession as much as they can. And the whole purpose around that is to stifle inflation, keep these prices, the CPI index and other things from increasing further and further and further and ballooning, to 12, 15% inflation. The Fed's goal is to keep that from happening and lower prices and lower the inflation rate down to 2 to 3%. It's going to take some time for them to do that, and it's going to hurt. It's going to hurt us. But right now, things are looking pretty bright, and let's take advantage of it. If you're a buyer, rates just went down. If you're a seller, yes, there's more inventory on the market, but there are still more buyers than sellers if you're in the real estate market. And if you're a homeowner, don't fret. In most markets, including mine here in North Carolina, I don't think home values are going to decline. I don't think so. I think they're going to not grow exponentially like they have, but they're going to stay steady Eddie, traditional 2, 3, 5% growth year over year over the next couple of years. But watch out for 2025. I think 2025 we're going to have one of the largest expansions in the economy in U.S. history. I think housing is going to blow up in a great way. I think the market, both bonds and stock market, are going to blow up in a big way in 2025. I'm just making some bold predictions, folks. I'm not a fortune teller, but I'm old enough to have seen this before, and I think that's what's going to happen. Stay tuned. I'll talk to you soon.